Hi, this is James A. with Full Capital, and I got Rowan Burch here with me. Rowan, how's it going, man?
Going good.
Going
Can't
good.
complain too much right now.
Well, I appreciate you coming on, and maybe to kick it off, give people a little bit about your background and your firm's background before we jump in here.
Sir, thanks for having me, James. Rowan Burch, Managing Director with Rowan Multifamily Advisors, or RMA. We're a full service brokerage company based in North Dallas. We specialize in value add multifamily assets. That's all we do, multifamily. Myself, I've been around the industry pretty much my whole life. My dad was in the apartment business growing up. During high school, if we didn't have a job during the summer, we'd work out at properties, laying sod or trashing out units, things like that. So I've been around the industry for a while. When I graduated, I got right into brokerage, 2013. So I've been doing this for about 12 years. Our company is a team that basically we're one succinct team. We compete with a lot of the other major national firms in the market. We have five brokers, support staff, and we do a fair amount of deals for our size. And yeah, happy to be here.
So tell me one story, because I got three boys. You guys,
Hmm.
there's three boys in your family, right?
Three boys, I'm the youngest.
Okay, three boys in your family. Like, what do you think was the most impactful thing, let's say, in high school? Because I got one in high school now, two in middle school. But like, what do you think was one of the most impactful things your parents did for you while you were in high school, to sort of expose you to this real estate game or
Yeah,
industry?
it's a good question. I think that experience I mentioned was pretty eye-opening. Like I said, if I did, during summer we were expected to have a job.
Right.
If we didn't have a job, we'd find work somewhere else with, or my dad would find work for somewhere else. So, when I was probably a freshman in high school. My brother was probably a junior in high school.
Okay.
And that summer, when neither of us had a job, so he had a property he owned in Euless, a small little property, and we were out there trashing out units. And so we saw some stuff that you don't
Or is
typically see.
is that
And
just cleaning? You're just cleaning out the unit when someone moved out,
so
or
so yeah, if there's an eviction or a skip,
yeah,
typically those units are left with full furniture,
just whatever.
disrepair, so on
Yeah.
and so forth. Yeah, so we were out there like, breaking apart desks that were put together to take them out, taking out trash, cleaning out the fridge with stuff that's been in there for months without electricity. There's no electricity in there. So, I
So
mean,
the
it was
smell,
very,
I'm
very
getting a
eye-opening.
smell from this Zoom. Like there's a smell
Yeah.
that's emanating from this apartment that you're not used to.
Exactly. So that was a pretty eye-opening experience, just in terms of how the apartment business works, how it can be some of the nasty parts of the apartment business that not everyone sees, not the non-glamorous parts of apartment owning and investing and being in this industry.
So your dad owned that property, and do you remember how many units that property was? Was it like
I want to
20,
say it
30,
was
40 units?
around, I want to say it was around 50,
50
50
units.
units.
Okay. And
Hmm.
he was just self-managing it, right? Like he
Yeah.
just, all right. Okay. All right.
Yes.
Yeah.
Self-managing. We were, doing a rehab. He had bought
Yeah.
it, from somebody who hadn't taken care of it a lot. So we
Yeah.
were laying sod, outside, building fences around like the chiller,
Yeah.
stuff like that.
So it sounds like I need to just buy a little 20 or 30 unit deal and put my boys to work. That'll be their
That's right. That's
summertime
right.
job.
Hey, I'm sure you've got a lot of clients, James, that could use the extra hand.
Oh, just
So
like farm them out. Just bring them. All
yes,
right. Just
yes,
send me an email if you need extra support.
exactly,
Uh,
exactly.
uh, yeah, no, that's great. I mean, I think, yeah, everybody, I think, yeah, just I think in our business, it's easy to get stuck. Like I spoke to a class this past week, and they're asking me all these numbers about Excel, things like that. Like they're more on the computer, right?
Sure.
Versus like getting out and seeing the properties and working the properties day in and day out. So I think that's super important. Okay, so right now. what have you guys sort of felt in the first quarter, let's say, of 2025, in terms of listings, tours, buyer activity, seller activity? How has first quarter been for you guys?
Yeah, yeah. The first quarter's been busy. I think that's the word that sums it up the
Okay.
best.
Yeah.
So first quarter we had the highest BOV activity we've had in the last 5 years.
Okay.
That includes 21 and 22.
Hmm.
We were doing about 4.5 BOVs a week. But the ratio of which we converted those to listings was very low. And it's not because we're losing out on a whole bunch of deals. It's more because these sponsors just aren't ready to pull the trigger yet. And so either they don't want to take a loss, they can't because the value is below their loan amount, um, or they want there's other reasons they're trying to time the market from a rate perspective. There's a lot of different reasons why people aren't moving, but very busy, a lot of work, and it's led to about we had about a 10% conversion ratio
Okay.
on that BOV activity, which is lower than we have in years past.
Right, right. Yeah, usually once somebody comes to you for a BOV, they're pretty serious, right? Because it's a lot of work for them, it's a lot of work for the staff, and then once you convert it to a listing. So the deals that did go to listing, how was tour activity,
Mhm.
in the past quarter? Like who was showing up at the tours? Was it
Yeah.
guys who have bought 21, 22, 23, or was it older guys who, they sold out in 21 and 22 and now they're coming back? Like what's the buyer profile of guys touring right now?
I think it's been the year 2025 so far for me has been a year of like new blood. So
Okay.
we've seen a lot of new players in the marketplace, a lot of groups that have been on the periphery of DFW for a long time that just haven't been able to make pricing make sense. Are now kind of coming back into the market, getting closer on deals that, if they were 20% off in the years past, maybe they're 2, 3, 4, 5% off, and even winning some deals in some cases. So we've seen a lot of new blood on our tours. Tour activity's been good. We just wrapped up the marketing on a deal we're currently invested in final, and that was 20 plus tours, 15 offers. So there's definitely a lot of capital out there chasing deals, but we're still seeing the spread of offers be very wide. So we'll have a 20, maybe even 25% spread from our top offer to our low offer. And so it's just people are want to buy deals, they want to put money out, but
It's at what price?
yeah,
It's at
exactly.
what price? Yeah.
Exactly.
Um,
Exactly.
what do you think the guys who are winning deals, right? Because I mean, you can throw in a low ball offer all day and you never buy anything.
Hmm.
The guys who are actually transacting, so the seller's willing to go. What do you think the buyer's sort of return box is, right? Is it an equity multiple of two? Is it an IRR? Is it a cash on cash? What do you think that sort of box is for the guys who are actually transacting right now?
Yeah, it's a good question. So there's two sets of deals that are
Okay.
coming out, right? There is really low base, like attractive basis deals where the yield necessarily isn't super attractive day one. So we've got those deals. Typically, those are distressed, or it's a really long-term owner and the rents are far, far below market. So that's going to be a attractive basis and not a great yield. Those deals are typically selling to guys that rely more on IRR, right? They're focusing on equity multiples and IRRs. Then we've got the deals that are performing really well, but they're high basis. So it's either, a loan assumption, or for whatever reason, operations are doing well, rents are strong, economic vacancy is tight. On those deals, we're seeing yield buyers win those deals. And those guys are looking for, 8% over the life of the hold, 6%, maybe 6.5% year one, cash
Okay,
on
so
cash.
cash on cash. Okay. All right.
Yes,
Yeah, yeah, yeah.
correct.
So for somebody to leave, for you to take my money out of my savings account making 4%, and I'm going to go into this safe deal, the basis might be a little bit higher in that second scenario,
Hmm.
but I'm assuming a loan at 4%. So my cash on cash is that spread that I'm getting because I still got 5 years left on the loan, for example. Okay.
Exactly.
So
Exactly.
those are the
So
two deals that are selling.
That's what I'm seeing. Yes,
Okay.
those two
Yeah.
deals are selling. It's very rare that we've got one in the middle where it's a great basis and a good yield. I mean, those are just not out there
Not
right now.
happening. Yeah. So yeah. What's funny is I will literally put Uh, I think I put something along those lines on LinkedIn. And of course, everybody comments, we want both, right?
Yeah,
It's like,
yeah.
of course, everybody wants both. Everyone wants a super low price and they want the cash on cash to be crazy. But it is hard, right? Because I mean, just in the last couple weeks, we've had all this volatility in tariffs. We've had a lot of volatility on the 10-year treasury, correspondingly. And so on these offers that are coming in, what are have the terms really changed that much?
You
In
know,
terms of hard money, in terms of due diligence, what are people sort of baking in on their LOIs right now?
yeah, it's a good question. So I think this quarter we've seen hard money come back in a big way. So I've definitely had hard money on all the deals we've got under contract this year. On the one we just wrapped up, the best and finalists, two out of three have hard money. The third is going to get hard money, during best and final. So we're definitely seeing hard money back in the marketplace. It may not be as much as it was previously, but somewhere in that, meaningful amount of, depending on the deal size, but say it's 50 to 150,000, depending on the deal size. Could be
Okay.
smaller if it's a smaller property. And then timeframes are still pretty much the same. We're seeing anywhere from a 14 to 30-day due diligence period, typically a 60-day close from the signing of the PSA. And then there's typically one extension baked in for an additional 30 days for additional earnest money.
Yeah, if buyers have learned anything, I think having that one extension in there, just whether
Absolutely.
it's the lender or whether it's the equity is taking a little bit longer, having that one extra extension in there. Um, Are sellers pretty, what are sellers focusing in on when they're, let's say those three buyers in best and final? What's usually the seller's number one thing right now?
I mean, it's always price because
Okay.
typically right now in most cases, someone is taking some loss.
Okay.
And
Yep.
so in those cases, they want to return every dollar they can to their investors and themselves, which I completely understand.
Right.
Secondarily, a lot of these groups are coming up against timelines, right? They have a bridge loan
Mm.
expiration that they extended, and so their final year of their bridge loan is this year, or they've got a rate cap purchase coming due, and they're going to have to do a capital call to get the rate cap money. So time frame, I would think would be number two. These guys want to have a streamlined closing, and then I think going hand in hand with that is just hard earnest money and making sure that when a seller goes under contract with James Ing, he's got some skin in the game,
Oh
just
yeah.
like the seller probably does, and he's going to close the deal.
Yeah, the seller, he's gonna have to do inspections, he's gonna disrupt the operations of the property, and I mean, I don't know if you've seen this as often. I mean, I've seen it a little bit more, and it's painful for everybody involved because somebody's not going to transact. Is that the
Mhm.
seller lists the property, and you guys do all the tours, but at the same time, he calls a lender and says, "Hey, I need to refinance this deal," and they're running sort of on parallel paths
Yep.
where
Yep.
if I don't get my price, then I'm just gonna refinance this deal if I can, right?
Right.
So if treasuries drop or something like that. So, um, have you seen
It,
that on deals, or is
it,
it
Definitely. We definitely
definitely
have
okay?
it. And, I can't necessarily put a whole lot of blame on the seller for that, but
Yeah,
it's a tough thing, right? When I'm talking to buyers on the deal and we're whispering a certain price, and most of the buyers ask me, "Hey, is this guy going to transact, where the
right.
market ends up?" And so it's a tough thing. They're going to spend time on it. Obviously we're spending time on it.
Yeah,
And for them to have, go through the full process and then to refi, not a fun situation for anybody who's looking at the deal or brokering the deal, but it is a reality in the market.
yeah, yeah. Um, is there anything else right now that you're seeing in the market that would be helpful for either buyers out there or sellers, in terms of what you're seeing right now that we did not touch on?
Yeah, I think on the buyer side, I really believe that now is a really good time to buy. So we've got, I think we've kind of gotten through the trough of the market. We're kind of coming up. Deliveries are, down
Yeah.
50% this
Yep.
year. But once the market starts tightening up and those lessened deliveries turn into data points where we're seeing more rent growth, we're seeing tightening on the occupancy front, we're seeing bad debt go down, like all that will immediately be priced in. So right now is the time to get out there, stretch a little bit on deals that you think are solid buys. Because I think once we start seeing the tailwinds come back into the market, you know, the pricing is going to go up.
Right.
So from a buy side perspective, I'd say, take that chance, stretch on deals, especially if you believe in them. On the sell side, I would say timing the market's not the best way to go about this. If you go out and get BOVs and you're serious and you need to sell this year, and they're at a threshold where you can live with the pricing, I would go ahead and go. People were waiting for like treasuries to drop like they did a couple weeks ago, and our phones were ringing off the hook and everybody was going crazy. But that was obviously short lived, and so
You
it's
had
it's
two
really hard to
days.
time.
You had
It's
two
really hard to
days to
time the
get it
market.
done. Yeah,
Yeah,
you had two
unless you're
days.
already, under application trying to do a refi or on the market fielding
Yeah.
offers at that time, you didn't get any benefit from it.
And what's funny now is like I'm working with some clients who like it's sort of call for offers and then they sort of drug out like the whole best and final process. But now treasuries just pop back up. So we're back to where we were. So you didn't really
Yeah.
get the benefit of it. So um no, you're spot on. I appreciate you sort of laying out sort of the two boxes that people are looking at right now. Um so what I wanted to wrap with is, you're going to be out at the conference in October. So I appreciate
I
you
am.
guys coming out to that. But then also, what's the best way for people to reach you if they want to talk maybe about some deals you guys have on the market? What's the best way for people to reach out to you?
Yeah, phone calls are always the easiest for me. I mean, me and the team are on the phone all day when we're talking to people, we're talking to buyers, we're talking to potential sellers. So that's always the easiest to get in touch with us. If you don't reach us, drop an email as well, and we'll get back to you. I think that's going to get us our attention the fastest.
Okay. All right, Ron. Thanks for coming on, and we will see you in October.
Thanks, James.
All right. I see you.